Have you ever thought about what life is going to look like 5 years from now? I bet you have. You're probably thinking, I'm going to have that Lambo in the garage. I'm going to have all this money in the bank. My retirement's going to be fully funded. Life is going to be good. But what if that really wasn't what happened? What if you got derailed from the plan? What if following everybody's lead, like so many other people have been doing, leads you off of a cliff? Let's paint the picture of what 5 years from now could look like without preparing for what's about to happen. You could be flat broke, without a job. Your 401k could have lost 30, 40, 50, 60% of its value, and then you had to close it because you couldn't afford rent or your mortgage to keep your family in the house you're in. There might be food shortages. Gas prices could be $7, $8, $9, $10 a gallon. They could push this electric car thing so much that it crashes the grid. We might literally go back to the old times when there is no power and we're lighting fires to be able to see things. Now, I know this is all pie in the sky stuff, but what if some of that came true? Are you prepared? I'm Chris Naugle. This is What Now? What's Next? Since the pandemic, things have been on the up and up and up, haven't they? I mean, think about it. You got a bunch of money from the government. I mean, they only printed $5.1 trillion in fiscal stimulus so that you could get checks, PPP loans if you own a business, EIDL loans. Everybody has a bunch of money. Not only that, your house price went up. If you own rentals, they went up in price too. The rents for your rentals went up in value. Your stocks that you own, your mutual funds, your ETFs in that 401k and retirement plan, they all went up. It's just been raining money, hasn't it? You've got nothing but lots of money going. And because of that, the inherent thing has happened. You've been spending more. You're going out to dinner more. Well, why wouldn't you, right? You've been locked up for a couple years with the pandemic, so now you're going out to dinner. You're spending more. Dinners cost more. You probably upgraded the car or maybe even added a second car. Maybe even upgraded the house, went to a bigger house. Because when you're making more, that's never going to end, is it? You're just going to keep making more money because the good times are just going to keep on rolling, aren't they? Let's talk about some of the things that are happening right now that might derail that I'm rich feeling. And here's some of the things. The Fed. The Fed's on a war path to slow inflation down, which, hey, you know, you're probably sitting there saying, well, they have to slow it down. I mean, look at the cost of food, look at the cost of oil, look at the cost of everything. It's going up and up and up. And then if you listen to the politicians, all they do is blame.
Oh, it's because of Russia. Oh, it's because of this. It's because of that. It's that guy. It's this guy. It's that guy.
They just blame everything on everybody else. But really, who's to blame for inflation? Well, since 2008, we've been in a low interest rate environment. Since 2008, the government has figured out that the printing press can literally run full steam ahead. Then the pandemic hit, everything shut down. It gave them the ability to print an additional $5.1 trillion. It's actually more, but we'll just call it right there. And then when they do that, some of that money goes in your pocket. Okay, the rest of that money goes into the asset pool, goes into the capital markets, increasing all assets from real estate to stocks to bonds. Everything went up. And when all the asset prices go up and you can borrow money pretty easily, and to borrow money it costs a low dollar amount because we're in a low interest rate environment, well, that right there spells disaster. And the disaster is spelled inflation. You guys can spell that out. That's right. See, when they print money, it devalues the current dollars in circulation. Think about it. Every dollar that the Fed and the Treasury print has to get value from somewhere. Well, where's it going to get its value from? We don't back our currency with gold. We don't back our currency with anything except for investor confidence. And the U.S. has ultimate investor confidence because they have the reserve currency. The reserve currency that oil is valued in. So because of that, they can print as much of this stuff, and every time they print it, it just reduces the amount of your current dollars, but no big deal. The printing press continues to run. Everybody feels rich. everybody wants to buy more stuff. Everything's gone up in price. But has it really gone up in price, or is inflation really the simple fact that your dollars buy less? Because that's really what inflation is. It means your dollars are weaker, which means it takes more of them to buy goods and services. Add on top of that a massive amount of demand. Millennials now are buying houses. Not only are they buying houses and providing a lot of demand for the limited supply out there, you know who else is buying the houses next to you? That's right, BlackRock, Blackstone, all the big hedge funds and institutions that have way more money than you, me, or your neighbor. They're buying neighborhoods, and they're paying way more than you can, which drives the price higher and higher, making it harder and harder for millennials to be able to buy a house. What else is the government doing? Well, they not only printed all that money, now they realize there's a problem and they're going to start slowing the economy down. So if you're the Fed, you're saying, you know what, all right.
So we're going to print a bunch of money, we're going to stimulate the economy because the pandemic killed it. Then once we stimulate the economy, we then are going to drive massive amounts of inflation, but we're going to call it transitory. But then when transitory doesn't work anymore, we're going to call it something else. When that doesn't work, what we're actually going to do is then we're going to begin the process of pulling the reins back and destroying the economy and letting it ride this crazy cycle. Oh, but we might be able to pull off a soft landing.
Right. So what are they going to do? They're going to destroy the economy. They're already beginning. They started raising interest rates. We thought they were going to do 0.25%, but then it moved to 0.5%, and the last increase was 0.75%. Have you looked at what that did to 30-year mortgage rates? Did you look at what that did to your lines of credit, to your credit cards, and all those low interest rate things? You know, everybody was so high on the thing that they could buy cars at 0% interest. Have you been shopping for a car? Is anyone offering 0% interest? What are you going to do? What are you going to do when easy money isn't easy anymore? What are you going to do when the whole economy crashes because the Fed intentionally crashes it to tame the inflation they created? Today is June 20th. Your 401k has already gone down more than 20%. How did that feel? Oh, it's going to bounce back. Right, because, yeah, it always bounces back. Oh, the Fed's just going to print more money. Not this time. You see, the cavalry's not coming to save the day. That's right. So who's going to save the day? You are. You and you alone. Are you ready for what's coming in the next 5 years? Let me just paint a little picture. If you can look back to the late 70s, early 80s, mortgage rates were 14.25%. Fixed. Got to make sure we throw in that fixed for 30 years. That's right, but you might be saying, yeah, but savings accounts were paying 10, 11%. If your savings account paid you 10 and it cost you 14.25, how much are you upside down? 4.25% is the spread, and it works against you. You see, it's no different than today. It's actually worse, because if we were at 0% in the easy money and you could take out a mortgage and get it for 3, what's the spread? 3. You see, it's all relative. But what you can expect in the future is much higher interest rates. No more 0% car loans. Credit cards are going to go up. If you got those 0% offers, those are going to go away. You got that home equity line of credit where you've been enjoying it at 3 to maybe 5%. Yep, that's going to go higher. Any line of a credit, any loan you take out is going to cost you more. And because the loans are going to cost you more, that means you're going to be able to afford less. Which means the average car payment today is over $700 a month. So because the price of cars has come up so much, what is the new payment going to be? Is it going to be $800? $900? Can you afford that? Are used cars going to be the new most popular things? But then the second problem will be there will be a hell of a lot less money to go around. Because as the Fed starts to shrink their balance sheet and taper the beast, they're going to suck money out of the markets. Which means banks are going to have as much to lend to you, so they're going to be very specific about who they lend to and for what they lend. And they're probably not going to want to give you any money. So if they don't give you any money, you can't buy the car. Oh well. Can't buy the new boat. Well, that's going to be tougher. And you probably can't buy those investment properties. Unless you figure out how private money works, like privatemoneyclub.com, you're going to have a really hard time getting some of those real estate deals funded. But what else is going to happen? Well, if this Russia-Ukraine war keeps escalating like it is right now, is there a possibility that the U.S. could be thrust into the war? Absolutely. Look back in time. Every other time the U.S. has gotten in difficult times, for some reason or another, we have ended up somewhere in some war. Have you ever thought about that? Well, war is big business. Big business that stimulates an economy. Big business that stimulates the Fed to print more money. And when the Fed prints more money, that's a profit thing for them because they get to issue more debt and they get to control more of our life. So is it possible that we could be thrust into a war? Absolutely. What else could happen? Food shortages? Already happening. What else could happen? That's right, you could lose your job. Because as the economy starts to crash and burn, your employer that you love and they love you might not be able to keep you employed at that rate you make today.
Get out of my office!
See, everybody's making more money because inflation has drove that up, demand has drove that up, and because nobody really wants to work anymore, let's be honest. So because of all those things, you're gonna see a lot of companies that you thought were too big to fail. Some of them will be banks. Some of them will be your iconic tech companies that you thought could never fail. They will. Some of them will be Wall Street firms. Some of them will be investment banks. Some of them will be your neighbor's restaurant. Some of them will be your business. I'm just telling you how it could be. And when you're searching for another job in a bad economy such as 2009, 10, 11, or any other recessionary period, is it going to be easy for you to find a job like it is today? No. So what is going to happen? Well, you might have to take a lower pay. Yes, that's true. You actually might go into the workforce and have to make less than you do today. And if you make less than you do today, what do you have to give up? Folks, I'm trying to get you ready by scaring you a little bit as to what could happen in the next 5 years. But let's actually talk about some positive things, because those are some, not all, but some of the things that you might come to expect in the next 5 years. But let's just say today. Right now, not tomorrow, not in a week from now, now, you start to prepare. You start to get ready for the storm. You start to divert some of the money that you have from somebody else's bank into your own banking system. That banking system is a large, mutually owned, dividend-paying insurance company. And that machine that you're going to deposit money into is nothing less than a specially designed and engineered whole life. And then once that money's there, you're in control of it. And once that money's there, it's earning a guaranteed interest rate plus dividends. And once that money's there, if structured properly, like what we teach, that money could be used to finance all the things that you want. The cars, the boats. But one smarter thing might be to actually be the person that has money, so that you then can lend to the people that don't have money and need money. You see, there's only two types of people in the world. There are people that have money, and one goal of people that have money is they want to make more. And then there are people that need money to make money. Imagine if you could bring both of those sides of the coin together. People that have money and people that need money all of a sudden came together in the middle. We've done that. It's called privatemoneyclub.com. Check it out. The launch is coming in October. Right now it's in beta. But let's digress back. Let's say you did start your own banking system. You would be in control of your money. It would be in a guaranteed place. It would be able to grow tax-free. It would provide a legacy if something should happen to you. And not only that, it would be protected against judgments and liens in most states. But the most important thing is you'd be able to use that money. And when you use that money to go make more money, your original money that you deposited would still earn uninterrupted compound interest. If you want to learn more, watch the videos on my YouTube. We'll put it up at the end. But once you did that, now you're in a really good place. But let's say you did some further preparation. All the money that's sitting in your 401k, your IRAs that you are down on right now, just so you know, let's just say you shifted the bulk of that into safer places. Maybe US government bonds, maybe just the cash position, which I wouldn't highly suggest because inflation will eat some of that up. But it's still better than continuing on the spiral down, down, and down. It's time to now get liquid. It's time to now get in control of your money. And it's time to now move from a growth mindset to a preservation mindset. And for some of you, time is running out. Tick, tock, tick, tock, tick. If you don't act quick, it's all over. So the other thing you'd want to start considering is if the markets are going down, what does Warren Buffett tell you to do? Warren Buffett keeps it super simple. When others are greedy, be fearful. Right now, you should be fearful. You should have been fearful for almost the last year. But then he goes on and says, when others are greedy, be fearful, he says, when others are fearful, be greedy. See, that's coming. It's not there yet. People are starting to get fearful, but they haven't got their June statements because those won't come out until July. Tick-tock, it's coming soon. But when they come out, people will realize how much money they lost. And they will then be looking for answers. And one of the best things you can do is shift the position to a safe place and then continue to buy in with future contributions up to the match. Continue to buy into the market as the market goes down, because then you participate in what Warren Buffett says is the ultimate 3-step plan for making money with investing. And that is buy low when it goes down. Doesn't feel good to do it. It's kind of like one of those massages you go in thinking it's going to feel good. And then all of a sudden you got one of those sports massage therapists that takes those thumbs and digs them in like claws from a dragon. You thought it was going to be an exciting massage, and then all of a sudden it hurts like hell, but you leave feeling pretty freaking good. That's what it's going to feel like to buy low, because you're going to do what everybody else is unwilling to do. The second thing you need to do is sell high. You should have already got out when the market was really high, but now it's still high in comparison to where we're going, so sell high. And if you buy low and you sell high, number 3 is you can't lose money. Warren Buffett says buy low, sell high, and don't lose money, the magic 3-step process. Those are some great ways, but some of you are still not convinced that you are going to be able to take action on anything. So you might be saying, yeah, but inflation. Great. Go to treasurydirect.gov. That's right, it's a government website. Look into the new issue. There's an auction that just opened up for TIPS. That's right, Treasury Inflation Protected Securities. They're paying 9.62%. That's better than inflation. So if you're worried about losing to inflation, then take whatever money you're really nervous about, shift it into that private banking policy that's specially designed and engineered whole life, or move it into Treasury Inflation Protected Securities. 2 great ways to preserve your capital and still keep it liquid. The treasuries aren't liquid the first year, but still, who's keeping track of a year? Come on. So folks, these are just a couple of the tips. A couple of the things you need to start doing to get prepared. You need to get your mind right. You need to stop blaming other people for what's going on. You need to start realizing the cavalry's not coming and you are the only one that's going to save your financial future. And you need to start taking action, because all this knowledge that I'm giving you right now means nothing if you don't do something with it. So this is the time where you are going to take action, because if you don't come crying to me, don't go crying to mommy and daddy, don't go crying to anybody, because it's your fault that you lost everything. And mark my words, it's coming. So get ready. Folks, I hope you enjoyed this episode of What's Now, What's Next. If you want to learn more about that privatized banking policy, then watch this video right here, and it will teach you all about how to take back control of your money and how to make your money work for you. And if you really love that, make sure you subscribe to this channel, click that little bell, actually smash that bell, so that you can be notified of each and every video we put out, so you can keep that preparedness going. We'll see you on the next episode.